Viewers, let's move on and let's also connect with Amit Kumar Sinha, who's the MD and CEO of Mahindra Lifespaces. Hi, good morning, Mr. Sinha, and thank you so much for your time. First up, let's begin by talking about your redevelopment project in Mahalaxmi. Now, this will mark your expansion into South Bombay's residential market. Talk to us about the GDV, the timeline, and most importantly, your rationale behind choosing this geography, given how highly competitive this market is.
Thank you for having me. This is an exciting project for us. It's entry, or if you go back to our portfolio, I would call it re-entry into South Bombay. Mahalaxmi is a very nice location for us. It's very close to some of the very marquee projects that other peers have done. So we're very excited to be there. Roughly 1,650 crores of GDV as we have planned. This is a tie-up with Livingstone Infrastructure, and we have partnered with them for the first time. They will help us with a few areas, and we'll focus on where we are extremely strong, which is design, development, and execution. So we are quite excited about it. From a timeline perspective, it will take roughly a year for us to launch. And then depending on the phases of the project, it will be either 4 or 5 years, which will be taken for RERA completion dates. Exciting project for us, and we want to be in South Bombay, and this is a start in that direction.
Okay. They say that real estate markets are going higher because stock markets have gone higher. Now that stock markets are going lower, could that have a lag effect on the way how real estate demand could move or potential bookings? I mean, have you started thinking like this already, that demand could peak out?
Yeah, so I think interesting question. We look at it in two ways: as the pricing peaked out or the volumes peaked out, and they are two different elements. When there is financial markets are doing well, it attracts a lot of investment into real estate market also. But the impact that you see is on the pricing side, and we're already seeing that pricing is coming down from what we saw. Let's say 2 years out of COVID till last year, pricing was very, you had a very strong CAGR on the pricing side. But we also see a strong demand from end users. Our end users are quite keen on buying upgrading their homes or buying a dream home. And that's why we continue to see a sustained demand from end users. So pricing may cool off a little bit, but we feel that the demand for homes from end users will continue. And the second order effect that we see in this market is there is a flight to quality, given the what consumers have experienced over the last decade, where many promises are not fulfilled. There were delays, there were issues with developers delivering their timelines. I think most of the consumers have realized that they want to buy from brands that they can trust, who will keep their commitments. So we see a lot of flight to brands that are safer, that provide they fulfill their commitment and provide a good value proposition. The cost of funding is better. The ways of working are very transparent. So we continue to benefit from that trend as
well. Okay. When you say price and volume, they are such a perfect scenario for how things are looking how we should look at the market. But volume is also a function of demand and affordability. Demand and affordability happens when economy is doing well, disposable incomes are looking better, wealth is getting created somewhere. My point is that there was a time when real estate would move and then that money would move to stock market. This time stock markets have moved and real estate is moving because of that. So I really hope I'm wrong, but is that chain getting challenged?
Yes and no, because post-COVID, we have seen a systemic shift towards owning, right? In the past, there was a trend towards, hey, we can rent and live in a rented home for a long time, or let's make investment in location that we may not be able to live, but it's an investment. I think many of those have worked out in parts and pieces. Overall, consumers want to own a home. And let's take the example of Mumbai. Mumbai is seeing a never seen before infrastructure development with Atal Setu, with coastal roads, with all these tunnels and new airport and so on and so forth. This will have a domino effect on the demand for jobs that will get created, as well as demand as a result, commercial and homes. And that is the real volume driver for all of us. And to your point, we have to choose the right customer segment to win over as we participate in this market. And as market may slow down, but we want to disproportionately go after consumers who are in the, let's say, 2 to 6 crore segment, which is exactly the sweet spot for our brand. And we have consciously chosen locations and the value proposition that allows us to capture this segment really well. And that's what will continue to happen.
You know, the other thing I also wanted to talk about is about the recent fundraise that you've done, the rights issue of about 1,500 crore rupees that was subscribed by the parent M&M. How are these funds going to be mobilized, and how much of it, if at all, is going to be allocated towards organic expansion for you?
Yeah. So a simple 1,500 crore is what we have planned. The process is on, likely to finish in the next 60 to 90 days. So we are excited about it. When I came on board almost a year and a half back, I think I talked about a new strategy for Mahindra Lifespaces, how we're going to focus on the right segment and how we're going to focus on a few cities and try to have a meaningful market share in those cities. I think Mahindra Group is right behind us. We have been designated as a growth gem. So this is a step in that direction where Mahindra and other investors will subscribe to it, and Mahindra will play a very important role in our growth journey. And we have to prove that, hey, are we doing the things right? Are we turning around the business in a way that will give us financial returns to our primary shareholders and all shareholders? So that's what happened. In terms of the uses of funds, I think we'll use it all for organic. There's not going to be any inorganic. In this business, the primary thing is how do you acquire land banks? And this financial year has been exciting for us. I'll give you one statistic. In FY20, we acquired GDV worth 1,000 crore, just 1,000 crore. Last year, which was my partial first year, we did 4,400 crore. And this financial year, which is not yet over, we have already done 18,000 crore of GDV addition. And that shows how we are building the business from the ground up. This is GDV's raw material, and that's something that's going to help us scale our business significantly. So this capital that's going to come in will be used for growth capital, partly to improve our balance sheet, but more importantly, it allows us to scale Mahindra Lifespaces to a different level altogether.
All right, but Mr. Sinha, in Q4, what we understand is that you have already bagged 3 redevelopment projects in Mumbai, purchased a land in Bangalore. Like, with almost Q4 coming to an end, give us a sense that how this quarter has shaped up, and what's the outlook on your pre-sales number? Because in Q3, we have seen a double-digit dip on that number.
Yeah. So in first, second, and third quarter, so this is a little bit of a lumpy business. So we look at on an annual basis or multi-quarter basis. So 9 months of this financial year, we were around 1,750 crores, which was, I think, 40% higher than previous 9 months. So overall, if you look at over a cumulative basis for the financial year, we have done well. And this year, we were expecting 3 or 4 RERAs. 2 of them have come through. One for Ivy Lush, which is in Wagholi, Pune, that has come through. And second major one, which is Mahindra Lifespaces, Mahindra Vista, for us in Kandivali Phase 2. Both the RERAs have come through, and we are expecting a strong quarter 4 for us. We had given publicly a target of a guidance of 2,500 crore many years back, and we are hoping that we not only meet that, but hopefully get ahead of that.
Okay, Amit, so good having you on the show. Thanks for your time today.
Pleasure. Thank you.